All right, some of you waited a long time to see the stock market analysis today, and I am going to give that to you right now. This is just some important information about how we apply our analysis and how you then could use it. Especially the greatest thing about is really discussing you taking trade ownership of your own trades, which is a key thing that we talk about in here. All right, stock market, multiple time frame analysis and projections. We're going to look at the Russell, the NASDAQ, the SPY, plus I'm going to do this on the level 4 grid. So that means that I'll be sharing the proprietary indicators for you to see, so you can see where we are in this market. So I see right in there, Ryan says, a great show. askSlim is amazing. Thank you for that. And it's about to get even greater. So let's take a look here as we switch over to the level 4 grid. I know this looks, wow, what is all of this? If this is something that for the first time that you've seen, and what this is how our level 4 members receive our live charts for them to upload and have our work uploaded to the Thinkorswim platform. That's what we, how we offer it, at least right now. Take a look here at the Russell. I want to start here. Now, what we're looking at here is the weekly chart. And you can see here on this weekly chart, I'm just going to grab these cycles right over here, these major harmonic families. Again, this is how we do our analysis. We learn about the energetics in the market and we apply so many other things to it. Momentum, the swing high, swing low levels, the Fibonacci levels, even candlestick patterns, in order to come up with the sum of the evidence. In other words, what is the highest probability? And our highest probability during this period was that we would see a market that would be moving into the downside in the October-November period. Now, this decline, this says end of November to middle of January, and that's because the Russell has different cycles than the S&P 500 and the NASDAQ. So it's important to know that what I'm showing you right here is not going to be exactly what you see looking at the S&P 500 and the NASDAQ, because this still looks like there's more time to go. Remember, I talked about interest rates continuing to go up potentially into late November. I talked about that in the beginning of the show. And the Russell is very susceptible to the movement in interest rates because these are zombie companies. They borrow a ton of money. And the more they have to pay for it, the less their opportunity of surviving is. So that's why the Russell acts differently often than the rest of the market. So this is what the Russell looks like on the weekly, still quite negative. You could see this is where the reversal scout turned negative way up over here and told you the momentum was negative. Well, that was some fantastic information. Let's look at daily in here. And on the bottom now, I have the market condition, the option bias indicator. What the option bias indicator tells you is when, if you were, a strategic option trader, how do you want your biases to be? And when it's in here in the green area, as you can see, dark green or light green, it's positive. It's likely to be moving to the upside, and little blips to the downside are likely to not be able to continue going down. And here where it gets to orange, as you see right over here, it warns you that it's an extreme and a top may be forming. And you could see that happen right over there. Now you can see that we have basically 3 tracks that we're looking at right now, and we are in a very oversold condition. That means that you're probably going to get a bounce in here, but it wouldn't make the bottom because over here we're looking for a short-term bottom to occur out here in the late October to the beginning of November. That's very much in line with what we've been looking for. These 3 tracks were going upward until you broke underneath this key level right over there. Now it's on support that comes from the weekly, but that is very likely to be broken. We're projecting down this black with the arrows is what we think the highest probability is, which is a move down to 1655. In here, so if it rallied in here, it would likely just flag and then move down again, just like it did right over here. You can see that. So a bounce right over here would be in the middle of the cycle, not likely to hold. So that is a look at the daily chart with the option bias indicator. Again, if you want to get the option bias indicator, you must be a level 4. Here you have on the bottom the slim ribbon PO and the slim ribbon on the top. And you can get a very stark look looking at this daily chart when it's in positive condition and likely to resume to the upside. These are momentum resumption signals, as you can see in here, or when it is negative and likely to resume to the downside. And you can see the slim ribbon often gives you support and resistance, and each of these rallies failed right in there, and it is still in very, very bad shape. Looking at the 2-hour, which is a great way to get a heads up on swing trading and the conditions in here, the 2-hour is also looking negative, as you can see, and that is very bad shape. Now let's switch over to the S&P 500, and you can see in here that, pardon me, I just dropped my ears. So 1 second. You can see in here that this was the period of risk right over here that we talked about, that when it was likely to move to the downside and continue the bottoming period, as you can see right in here. Now, the question is, was that the low, or was the low going to get taken out in the daily pattern that bottoms in late October? I pretty much thought that it would come down again, but I wasn't sure. Momentum turned down right in here, and you can see it's been negative that whole period. So there are kind of two scenarios in here. Either that's the low, or the low is going to get taken out. And these supports right over here that we've talked about, 4,200 and 4,110. That's what we're looking for right there. And that is this period of risk continuing on the downside right there. We talked about the very end of it is often a capitulation, a throwaway in the market, like you had right over there, and you had these few weeks here, and then this big down week right there. And that's may still be coming. We could get another good sized week or two. So again, momentum negative in here. These lines in the bottom are the FXI and the FEZ, and these are pointing to continued weakness out into November, December. So we may not be able to get this rally to really develop in a big way until we get past those periods. And maybe it's something like this minor cycle that you see right there, and then taking off. And we're looking for a better November and December. Hopefully the Middle East crisis will pass without it blowing up the world. And then we'll be looking at a reason to buy. If it blows up the world, well, forget about it anyway. So, but that's November, December into maybe January, looking like a better period. And that, of course, would look like a test of that 4,600 high area. This is the look at the daily in here. And again, we had these going higher, these three tracks right there, but we did lower them because we got down here under the 78.6 and getting down close to where that cycle low is. Again, this trough points to a late October bottom. The question is, will it find the support here at 4,200 or at 4,110 right there? That is really what we're looking at there. Also, you see the big head and shoulders right in here that we talked about so long ago and said that the head and shoulders measurement is down over here. That's at about 4070 if it wants to complete that measurement. The next week to week and a half, very, very risky right in here. And that's likely going to have that capitulation that we're looking at. Note on the bottom, the option bias study, where it was so positive in here. It went very negative, went only neutral, and turned negative again, where it is staying there. And this is telling you, if you're a strategic option trader, your position should be biased negatively. If you're picking on the bottoms, then you're probably in trouble or have been in trouble. Here you can see what we're looking at on the daily chart as far as the momentum conditions go. It neutralized, but then turned negative again, as you could see. And of course, great information. Look at these resumption signals when it was positive. And here it told you a negative condition still existed. It turned neutral and then negative again. Here on the 2-hour chart in the S&P 500, on the bottom here is the market condition indicator. This is a multiple time frame indicator, which gives the important emphasis to the longer inputs that are in this. What this did right over here, it got to the swing zone. And when it gets to the minus 25 to plus 25, it tests it. If it gets up there and fails, it says that the longer term, which is the dominant energy in the market, is still pushing to the downside. And you can see that is a negative indicator right there and warned us that the market was failing again. Look at the momentum, and here is that turned negative. And again, if you're a swing trader, you want to really pay attention to the 2-hour. Let's take a look at the NASDAQ. It is the same story. This daily low projects out to early November. This is coming down. Supports right over here at 14,300 and then down over here at 13,825. I don't think this could be in play 13,300, but it would take a panic, a pretty good panic if that happened. And you can see out over here looking past this early November period is where we look at the market to be able to do better. And based on this really small pullback in here, and based on these really good positive configurations that we see in here in these harmonic families, there is a strong possibility it'll get over 16,000 sometime out here late in the year or in the beginning of 24. The only thing that could really prevent that analysis would be a total debacle over these next few weeks, which is an unlikelihood. Of course, again, the Mideast war, something could happen. Here you have, again, this breakdown through the first resistance through the 78.6. Were there to be a rally in here, then it would likely come down. The top of this projection, 14,301. This is from the weekly, and then this level down over here at 13,800. So those are what I consider to be worst cases for this decline in here, and only maybe a week to two on the downside. Again, this is a period where there could be a capitulation. Note the option bias indicator, this yellow, has been neutral here for quite a number of days, but as it comes down in here, I wouldn't be surprised if it turned negative. See this dotted line, this dashed line in here? That's the Russell, and the Russell has a significant influence. And you can see in here the shape of this minor movement in here, and the shape of the next minor movement where it needed the Russell to release before it could move up again. And now you can see they're coming down over here into the early part of November. So that's why we think the downside is pretty good probability. Again, it turned to positive momentum for a brief period of time, and now has turned negative again on the daily. Again, you see this test up into the swing zone, and then the failure under it right there, warning you that the longer dominant energies are pushing to the downside. So another great indicator looking at the market condition indicator.